Hi, Rich Davis here with an important financial alert. We were fairly warned by Thomas Jefferson and the abuse of power by corrupt banks. 5 years after the financial crisis, we are still plagued by the dangers that led us into this trap. The top 5 banks, JPMorgan Chase, Bank of America, Citigroup, Wells Fargo, and Goldman Sachs, have almost $9 trillion in assets, well beyond half the entire size of the U.S. economy. Because these institutions are so massive, the U.S. government and the Federal Reserve have a vested interest in making sure these too big to fail casino banks stay afloat. These big banks feel empowered and continue to take insane and outrageous risk with the guarantee of a bailout from the U.S. government, which means that your hard-earned money continues to bail out these casino banks. Did you know that 3 of the top 5 banks in the U.S. would not be profitable today without federal subsidies? Yes, banks are on corporate welfare and you are their sponsors. For example, swaps are a kind of derivatives used by the banks to speculate on everything from interest rate changes to currency values. The Bank of International Settlements estimates that there are $633 trillion in swaps, outstanding or more than 8 times global GDP. According to the disclosure provided by the Office of the Comptroller of the Currency, or the OCC, America's top 4 banks have leveraged up their total risk-based capital by an average of 79,203.5%. These banks have taken your deposits totaling $444 billion and leveraged them up to $208 trillion. So is it okay for these top banks to commit fraud and settle, discriminate against American citizens and settle, launder drug money and settle, demand you maintain a standard of credit whereby you can only obtain 80% to the value of your capital while their standard is 80,000% credit to capital? Today, keeping an accurate tally of the government investigations against big banks seems nearly impossible. Let's use America's largest bank as an example, who has more exposure to derivatives than any other institution in the world. It is no coincidence that JPMorgan is paying $410 million to the Federal Energy Regulatory Commission for rigging electricity prices at its power plants. $12 billion set aside for London well derivative losses, and involved in talks with the Federal Housing Finance Agency for misleading investors, and just offered to pay $3 billion to settle criminal charges related to its issue of its toxic mortgage-backed securities. Stay tuned for the next financial alert, as I'm going to tell you the truth about Bank of America and the impending demise of 3 of the top U.S. banks. Remember, here at Best FQ, our goal is to provide you with true financial intelligence. Thank you and have a blessed day.